Steve Free in Chicago with the morning comments. Yesterday, markets were lower after the deliveries were higher than expected in soybean oil and wheat. There was also bean and meal deliveries, but no corn deliveries. Overnight, we've got beans down about 4 cents. July is at 11.58. Soybean meal is losing to soybean oil. Yesterday, meal gained quite a bit on oil. Oil shale dropped to 38% on the crush. The news was a strike in Argentina could slow their exports. The strike was ended with the passing of a bill that identifies the reform better, and so the strikers in the strike. And so meal gapped open lower last night, and oil is gaining back on meal, despite the fact that oil was probably the highest priced oil in 2023. Now it's probably the lowest price, with the U.S. crush increasing and adding to stocks, and the demand for renewable fuel is not as strong as some people had thought, and production is probably ahead of demand. We did note that the EPA came out and talked about restrictions, farm practices, fertilizer use, and also the cover crops to make crops available for jet fuel demand. So we'll see if that affects the supply of beans for that crush, for that jet fuel. In the corn market, right now we're unchanged, 445 in the July. Again, corn has been following wheat. Wheat sold off yesterday, corn followed. Despite good weekly, I guess it was lower corn exports for the week than the previous week, which offered some resistance. Farmers are trying to get into the fields and get as much corn planted as they can before wet weather sets in over the next 10 days. Behind that, it looks like mid-May we'll see more space between the rains to allow these crops to be planted. Spring wheat also, plantings were well ahead of the average trade guess, while the winter wheat crop ratings declined 1 percentage point, but not as much as people had feared. The wheat market right now, Chicago's up 2 cents, KC's down 4, Minneapolis is down 1. Stocks continue to sell off in front of Fed Chairman Powell's talks, looking at more hawkish talk, and the trade's going to be watching if he even mentions a rate cut in 2024. We also have the dollar higher. Yesterday, the dollar was sharply higher, which also weighed on commodity prices. Crude's down to $80 a barrel. That's the good news for the consumer. But as far as the Fed is concerned, rising labor costs could be inflationary, which delays their rate cut. And we've got gold about unchanged. Coffee, cocoa, sugar, cotton are all lower.